All right, welcome to Bill's Crypto Corner. Guys, the DFL members, I know that you look forward to these. We've had so many great calls and so many great Zoom meetings here. In fact, Mark and Joe, you just did one recently. And Mark, you talked about debt and the acknowledgement of it. And I want people to know that we're going to talk more about that and do a complete deep dive into what's next, the next plan. But since this is about crypto today, Mark, I want you to share with our members, you were a stockbroker for many, many years, very successful, where you bought a stock and you held on to it. And that's what you were taught and that's what you trained on. But in this business, we do it a lot differently. We're more of trading. We use the investment knowledge to decide which ones to trade, but we use the trading philosophy to pull profits. Mark, share with us real quick here what the big difference is for you.
Well, Bill, I'm glad you asked me that question because it was a big adjustment for me. I had to unlearn everything that I was taught with the fundamentals, and it just I've had heated debates with Joe, and I say, Joe, it doesn't make sense for me to buy this, and Joe kept saying it doesn't matter. And until I understood that and to be able to plan, so when I actually buy a coin or a stock, I have to actually know what I'm selling it for. And so if I don't know what I'm going to sell it, then I'm not going to buy it. And it has to meet the criteria. And that's what I had a very hard time with. And this is what I've learned in the course as well, to be able to execute a trade and to be able to take a profit and just repeating it and just doing that over and over again. And it takes discipline to be able to do that.
Well, and I know how much you struggled with that, but I also know how well you've been doing with it too. So congratulations to that. And people, members, that's what we're looking to do. That's what we're teaching you to do. So Joe, I would say the last few days has been an incredible, what a lot of people on Facebook, on the social medias have been saying is an incredible roller coaster ride. I mean, I've even seen where they come up with these conspiracy theories about what happened. How did it go from there down to here? And it must be, I wouldn't doubt if there's people blaming it on aliens, right? I'm telling you, it's crazy what's going on in people's minds. So to kind of help people understand that it has been a very good year, really, but a very good last few days for people that understand the philosophy of taking the profit and trading. So Joe, take a few minutes to kind of share with people so that they understand they're on the right path. They're going the right direction. They just got to execute.
Sure. I do want to start with something that Mark said, because I don't want there to be any confusion. When we say that the fundamentals don't matter, bear in mind what we're talking about is an asset that we already approved that meets our criteria. So we're just going to trade the cycles, right? Technical trade is just trading the cycles. What Mark is looking at is the fundamentals of a long-term investment strategy, and they don't matter to us because we're not going to hold it. We have a predetermined percentage that we know from the past that we're going to sell it at. So when we buy it, we already know our sell price. I think, and listen, Mark, the fact that him and I were willing to stay the course with each other and go through this, because I needed him to see what I was trying to show him. And if I couldn't get through to Mark, I wouldn't be able to get through to anyone that is set in their ways. So I appreciate it very much that, listen, we're really good friends. We've been great friends for decades. But anyway, so, some people are going to get mad that I say this right now, but I can't help it. I'm going to say it anyway. I'm really glad that Bitcoin plummeted. I really am. If you remember, for the last few months, the live feeds, I've been trying to get everyone geared up for what we expect to happen based on the cycle at the end of the year. There is no better way to see what I'm telling you than to feel it in your gut. What do I mean by that? If somebody decided to be an investor rather than a trader, we don't care what they do. We just want to prepare them properly for it. That feeling that you felt as it went down, that's how you're going to feel for probably a year next year, if you decide to hold. That's I don't have any problem with people holding. There are a lot of people that do that. That's just not where the larger profit is. It's more profitable to trade than it will ever be to hold it. But there's this thing in crypto that people believe that, hold on for dear life, the hodls. It's only because they didn't take the time to learn how to trade. So to your point, Bitcoin plummeted. What does it mean to me? Nothing. I can't go down far enough for me. I don't care. I drew my lines and I waited. And as soon as it crossed over, I posted. So if you're watching I think I posted at 4 o'clock in the morning this morning, because it did another reversal. Yes, it did two yesterday in a 24-hour period. So again, what does that mean? That means look at Bitcoin, use it as your trigger. It's not profitable enough for us to even trade, right? So we're only using it as a trigger. As soon as it reverses, the market follows. What's off by the most with the most potential? And I put like 5 assets up that we've been looking at, and like Polygon is just out of control. I went in again last night. I went in twice yesterday in the same asset. And you know what? This gives us huge potential, huge opportunity when Bitcoin drops like that. So we're kind of the opposite of the headlines and the conspiracy theorists. And I'll share something real quick. A friend of mine said something derogatory towards China, because China seems to be getting blamed for this, right? I think it's ironic. Right. There's always a different country that happens to be saying something that gets all the blame or credit. So this morning I posted at 4 a.m. Thank you, China. If they really are the ones that drove it down, thank you. You gave me 2 25% trades in the same assets within 24 hours. Normally, I only trade in the morning and at night. Everyone knows that. But in times like this, it's feasting. I spend a little more time because it's fun. It's fun. It's enjoyable. So I get that people are crying the blues, but take the time to learn how to trade the cycles and enjoy it. I mean, so let's talk about that for a second. If the market went down 30%, I saw assets that went down 40% in 24 hours. So if they had $100,000, it went down to $60,000. But if they weren't in and they had 225%, they went from 100,000, right, to 125,000 to over 150,000.
Right.
That's a big swing, 60,000 or 150,000 in a 24-hour period. Well, I'll say 72-hour period. So right. I'm glad it happened now, because again, my point is, the people who have decided that they're not going to learn to trade, that are going to be investors and hold, you're into some pain next year, pain and suffering each week as it ticks down, when you could have pushed it into a stable coin and waited, drew your lines, and then taken 10% here and 10% there. If it gives you a 25, by all means, take it. I took 25. I didn't even take the whole profit cycle because I didn't know where it was going to go to. So it was in front of me. I said, I'm not letting this go. I'm not, and I just took the profit. But I hope I answered your question.
You did, Joe. And I want to just bring that into what I personally was able to do it, because I'm relatively new in this space, right? Mm-hmm. I'm going to use just Ethereum as an example. It has dipped in a large amount, percentage-wise, twice since I've been following. Now, it goes up and down all the time, but it dipped about 3 months ago, and it dipped like crazy over those last 48 hours. Well, I started with 4 Ethereum coins, and I followed the cycles, and I sold when I did it. I didn't know it was going to drop like it did the first time. I didn't, but it did. And then I took the money and I repurchased, and I went from 4 to I got a total of 8 with my profit that I had pulled out at different times. Mm-hmm. And when it dropped down there, I bought again. And I didn't buy it at the lowest, because that's not how you've taught me to be. You just say, follow it, follow the cycles and go. So then I had 8. Well, this time it went up pretty darn high. I didn't ride it to the top. I got out when I got out with the cycle. I said, okay, I'm out. Then it dropped, and I had an original order in there that I was going to, okay, I'm going to buy it at this, but I go, maybe it'll go a little lower. And it did. And I got it for actually $250 less per coin. And now I have like 11.7 coins, right? I mean, the same dollars. That's the amazing thing. So my assets grew. I use it like Monopoly in essence. In other words, I went from one house to a duplex to like you know, a fourplex, right? You know, I mean, I'm going, okay. I mean, the rents are all the same, right? So now I've got it fourplex, which actually, you know, more than that now, but I'm saying that it has gone up. So now as we watch it, let's say it goes back to where it was at. Now I've got a total of almost 12 coins times whatever dollar amount that is, but there'll probably be 7, 8 different trades before, you know what I'm saying? I'm not even working because it's just happening. So I used Ethereum as an example. I did the same thing with Bitcoin just a little bit, but I don't have as much. So I didn't do as much from a standpoint, but it still grew. But some of those other coins, I just took advantage of it. I just took advantage of it. Like I missed the Dogecoin in the very, very beginning, right? But I said, well, if you follow the cycles, it's going to go down. And it did. And I bought more with the same money. That is what we learn here. And Joe, I do appreciate it like crazy because I think people have just got to change their mindset. That's all. So I thank you. Did you want to add anything, Joe, to that?
No, all I was saying is, you know, it's our strategy is taking the long-term hold mindset. So the asset has to be good enough that we would hold it for years. However, we don't want to hold it for years. We just want that to be criteria for a quality asset, not some flash in the pan, because we really want to trade the cycles. The more often it trades, especially if it's doing, you know, 20, 25% trades, a time or two a month, you know, that's why I always encourage people to use their calculators and figure this out. We don't like throwing the numbers out. We want them to understand what they actually have here. And if this thing, let's say Bitcoin does a nice run, right? Again, we always say, don't bet against Bitcoin. Use it as your trigger. So all it's going to do is swing the asset that you like up and down higher percentages that Bitcoin is moving, which is why the assets that we're talking about are up 3, 4, 5, 6,000% in the period of time where Bitcoin's up. Well, it sounds funny to say, only 600%. If Berkshire Hathaway wishes they could get numbers like that. But anyway, I just wanted to, you know, to share that. I appreciate you sharing your story because your story, you know, is going to resonate to other people, and so is Mark's. And collectively, we're better than any one of us could ever be. So I appreciate our community and the feedback from everybody.
I agree. I agree wholeheartedly. So listen, thank you for joining us today. We'll be back next month. Have a great Memorial weekend next weekend, right? So enjoy yourselves. And thank you, Mark. And thank you, Joe. Appreciate you.
Happy
God bless.
trading. Thank you,
Yep.
Bill. Thanks for everything. Bye, guys.